You are watching What's Up in Construction with Mike and Sarah, better known as Martin and Sienna. Those are our virtual AI-generated avatars.
They sound lovely.
Welcome back to What's Up in Construction. I'm Martin with your go-to monthly deep dive where industry veterans, contractors, remodelers, and homeowners come together to break down the data, get inside the trends, and see what's ahead.
And I'm Sienna. Welcome, everybody. This December edition is one of our most ambitious yet. We've seen a shift in momentum, a thawing in parts of the market, and renewed optimism across remodeling, resale, and housing turnover. Whether you've got a project in motion, a home you're thinking about refreshing, or you work in the trades or design or development, this show is for you.
That's right, because even with the bumps and challenges in the macro environment, there are signals flashing that remodeling and renovation activity is heating back up. Homeowners are renewing energy toward projects, and new opportunities are revealing themselves.
Let's get into it.
First up, let's set the table on the broad housing market pulse, because what happens there cascades into remodeling, resale, homeowner moves, and so on. According to the latest numbers from the National Association of Realtors, NRR, existing home sales rose about 1.2% month over month in October 2025 and are up roughly 1.7% year over year, hitting an annualized pace near 4.1 million existing home sales.
That improvement is meaningful, especially after a period of caution and softness for many markets. Inventory is beginning to loosen a little in certain regions, creating more opportunity for buyers. And with buyers re-entering or refocusing, that often leads to increased homeowner activity, whether listing, upgrading, or repositioning. The NAR noted supply is around a 4.4-month inventory, which is more balanced than the tightest extremes we've seen.
What's important for our listeners, homeowners, remodelers, builders, is that when existing home sales stabilize or pick up, people are moving, listing, selling, repositioning, or buying. That triggers pre-listing refreshes, remodels, and value add on existing stock. The forecast from NAR's economists is especially compelling. The barometer for existing home sales is expected to grow by 14% in 2026, which is being called a key remodeling barometer for the trade.
Right. That projection is a signal light. It suggests that turnover, the exchange of ownership in the housing stock, is expected to accelerate. When that happens, we often see a surge in remodeling demand because new buyers want to customize or sellers want to upgrade before listing. For homeowners listening, if you're thinking about buying, selling, or refreshing your home in the next 12 to 18 months, this is a moment to set the tempo.
Let's look into the sentiment and the remodeling sector. I think we will see confidence gaining.
Now, beyond the headline housing sales numbers, what's happening inside the remodeling and renovation industry itself is starting to shift upward. According to the latest report from Ion Housing, the remodeling market sentiment improved in the third quarter of 2025. Their data shows their index, reflecting current conditions and forward-looking indicators, is still solidly positive, and importantly, their future indicators and backlog readings rose quarter over quarter.
Exactly. The data shows that all size buckets of projects are rising in sentiment. Large projects, over $50,000, medium projects, and small jobs are all showing gains. The current conditions index ticked up, and backlog increased as remodeling firms report more committed work. The increase in leads and project inquiries speaks volumes. That pipeline is strengthening.
Another trend we're seeing is that renovation businesses themselves are expanding their share of the residential construction market. According to recent analysis, the number of remodeling establishments in the U.S. has nearly doubled over the past 25 years, from under 69,000 to more than 128,000 remodeling establishments. And remodelers today represent a larger share of residential building construction. That's not just a post-pandemic blip, but part of a structural shift where renovation and retrofit are becoming core to the housing ecosystem.
What that means for listeners is this: Remodelers and renovation firms are becoming more central in the market. There's more capacity, more competition, more specialization. For homeowners, that's good news. There's more choice, more experienced trade partners, and more niche expertise. For remodelers and contractors, it means sharpening processes, focusing on differentiation, and being ready for a rising tide.
Supporting that, another piece of research from the Harvard Joint Center for Housing Studies, JCH, shows that homeowner improvement and repair spending is forecast to remain stable and even grow modestly into early 2026. Their leading indicator of remodeling activity, LIRA, projects that year-over-year spending on home renovation and repair will rise roughly 2 to 3%. 4% in early 2026 before easing slightly. And total homeowner remodeling spending is expected to hit a new record high, around $524 billion.
So there's a convergence here. Positive shifts in housing resale/turnover, growing sentiment among remodelers, and macro data pointing towards stable or rising homeowner improvement investment. That gives us a foundation for optimism, but also underscores why now is the time for both homeowners and trade professionals to prepare. What's fueling the rebound, and why remodeling is heating up again?
So let's pause and unpack why remodeling is heating back up after what some might describe as a post-stimulus, post-pandemic pause or plateau. We've been through waves, a boom period where home renovations surged, then a cool down, shifting affordability, rising rates. Now we're seeing signals that homeowners who delayed are re-engaging and demand patterns are shifting.
One major input, the existing home sales uptick and the expectation for growing sales in 2026. When people buy and sell, they renovate. They update kitchens and bathrooms before listing or after purchase. They refresh for resale. The NAR forecast for a 14% rise in existing home sales in 2026 is a big part of this rebound.
Another driver is aging housing stock and deferred maintenance. Nationwide, homes are older, and many households delayed upgrades or deferred big projects in recent years because of price and financing pressure. As prices stabilize and homeowners accumulate equity, those deferred jobs start to come back. The data shows remodeling establishments have grown significantly over decades, and renovation is becoming a larger share of residential construction work overall.
Also, sentiment and lead pipelines are improving for contractors. According to private sector reports, like from WHOIS's recent renovation barometer, the expected business activity indicator jumped to 66 for Q4, and project inquiry activity and new committed projects spike for build-only remodelers and design-build firms. That rebound in inquiries shows that homeowners are restarting or ramping up their renovation ambitions.
On the financial side, mortgage rates have shifted somewhat. And while affordability remains a filter, the slight moderation in rates, combined with homeowners' built-up equity and desire to refresh their living environments, is driving reconsideration. Buyers who might not move into new construction are opting to invest in their existing homes. Also, many are prioritizing sustainability, energy efficiency, aging in place, aging housing stock upgrades, and generational renovations.
So in essence, turnover is rising, sentiment is improving, infrastructure of remodeling businesses is solid, and homeowners are getting motivated again. That's the mix that signals heating up post-pause. Meanwhile, let's look at residential starts, regional surges, and why remodeling looks better than new builds right now. All right, let's zoom a little deeper into residential construction specifically, because Dodge just released some numbers that are pretty revealing, and honestly, they tell us why remodeling is becoming not just the alternative option, but in many cases, the preferred option for homeowners and contractors heading into 2026.
Right. Here's the headline. Residential building starts dropped 15.4% in October, falling to an annualized pace of $323 billion. That's a sharp month-to-month cooling, but the story underneath that number is even more interesting.
Exactly. On the single-family side, starts actually rose 2.2%, which shows there is demand, but builders are being selective and cautious. But multifamily starts? They fell off a cliff, down 38% in a single month. That's huge.
And if we zoom out to year-to-date trends through October, residential starts are down 5.1% overall, but the split is fascinating. Multifamily starts up 10.6%. So multifamily is carrying the sector this year, but the October drop shows that even that segment is now cooling.
And over the 12-month period ending October 2025, we're still seeing that pullback. Multifamily up 10%. This tells us that big multifamily developers have been keeping the sector afloat, but new pressures, financing costs, materials, insurance are slowing even them down.
And the big multifamily projects that did break ground in October tell their own story. These were serious, institution-scale builds.
Because for the average homeowner, the average builder, the average remodeler,
these aren't typical residential starts. These are mega projects, and that's the key point.
total residential starts down a little more than 3%. Single-family homes are down more than 9%. New home construction is slowing, and the projects that are happening are large institutional ones. That gap is what creates opportunity for the remodeling world.
And while residential starts were cooling, we saw something else happening regionally. Construction starts surged.
Those surges are almost entirely driven by non-residential and infrastructure projects, utilities, transportation, civic work, energy. Again, big institutional spending.
Only the Northeast dropped, and it dropped hard, down 40.1% month to month.
When new home starts fall, remodeling becomes more attractive, financially, strategically, and emotionally. People stay where they are. They invest in what they have. They customize, update, and improve instead of moving.
Exactly. And builders are seeing the same thing. As new construction slows, because financing is tough, land is expensive, and materials are volatile, remodeling becomes the more stable, predictable business line. For homeowners, it's often the more affordable, less disruptive path. For contractors, it's the sector with rising inquiries, rising backlogs, and better margins.
So this Dodge data, the drop in residential starts, needs to be understood as good news for the remodeling world. It reinforces what we're seeing in sentiment surveys, NAR projections, and pipeline activity across the country.
Before we move into strategy, we want to bring in one of the most fascinating pieces of analysis released this month from the National Association of Realtors. Jessica Lautz, NAR's Deputy Chief Economist and VP of Research, presented fresh insights from the 2025 Profile of Home Buyers and Sellers, and the shifts she highlighted explain so much about why the remodeling world is heating up again.
And the headline here is Demographics. The typical home buyer today is 59 years old, and the typical repeat buyer is 62. That is dramatically higher than historical norms. This means people staying in their homes longer, moving later in life, and making more intentional decisions about the homes they choose.
And Lautz shared the #1 reason people move today: to be closer to friends and family. She calls it the grandbaby effect. It's not a job relocation, it's not trading up, it's not chasing school districts.
And that shift is enormous for remodeling demand. When people move later in life for lifestyle reasons, they don't necessarily want new construction or a starter home. They often buy older homes and then immediately remodel them to fit their next life stage, whether that's accessibility, comfort, energy efficiency, or multi-generational living.
It's pure lifestyle motivation, being near the people who matter. On the flip side, first-time buyers are getting squeezed. Their share has dropped to an all-time low of 21%, and the median age of a first-time buyer is now 40 years old. What's holding them back? Lautz says it's a combo of
That's why so many homeowners who would have sold aren't moving. Instead, they are turning to remodeling, upgrading what they have rather than competing in a tight, expensive market.
High rent, student loan debt, and difficulty saving for a down payment, all creating major barriers to entry. Lautz also pointed out that real estate agents continue to play a pretty large role. 88% of buyers used an agent or broker. 91% of sellers worked with an agent. People need help navigating this environment, pricing correctly, marketing effectively, and finding qualified buyers. And remodelers who collaborate with agents will be in a prime position as these demographic trends intensify.
So the takeaway: aging buyers, lifestyle movers, and delayed first-time buyers are rewriting the playbook. And remodeling is at the center of how all of these groups adapt. Now, let's talk a little about regional and local dynamics.
Yes. Before we move into tactical strategies, here's a quick note on regional variation, because as many listeners know, the pattern depends a lot on where you are. You and many of our listeners operate in the Southeast and regional markets outside the biggest metros, and what we see nationally doesn't always land the same locally.
That's right. The existing home sales data from NAR shows stronger gains in the Midwest and the South in recent months, while the West remains more challenged due to supply constraints or price pressure. So for areas like where we work, or listeners in similar regions, this means that inventory is loosening in pockets and price velocity may be more stable, which opens up opportunities for both listing homes and buyer movement.
If you're in a market with decent inventory, reasonable price levels, and a flow of sellers and buyers, that pre-listing refresh, exterior updates, add-ons, and smaller-scale renovations are picking back up. In markets still overheating or supply-constrained, sellers are holding tight, but demand for retrofit or deferred renovation is still alive. So tune locally, dig into your metro or submarket data.
Let's go over some strategic takeaways for contractors, remodelers, and homeowners. All right, listeners, time to bring it home. Based on everything we've unpacked, here's what we recommend for both professionals in the industry and homeowners thinking about projects in the next 12 months.
First, for contractors and remodelers, position around resale and pre-listing work. With existing home sales expected to grow in 2026, sellers will look for value-adding renovations, kitchens, bathrooms, curb appeal, staging upgrades. Start building relationships with real estate brokers and listing agents now to capture that flow early. Diversify project size and scope. While large remodels will always matter, we're seeing strength in small and medium-sized jobs, maintenance, aging in place, energy efficiency, and modular upgrades. Keep your team flexible. Keep your estimate presets updated for those scopes. Invest in marketing and lead pipelines. As sentiment improves, homeowners are researching and shopping again. Strengthen digital presence, show past portfolio, offer quick refresh audit services, and stay front of mind. Lock supply and materials now where you can. There's still volatility in costs, but demand from big infrastructure and institutional builds is continuing. Secure material agreements, pre-buy where feasible, safeguard your margins. Train for quality and transparency. Homeowners may be more selective now, inspecting value closely. Transparent pricing, project phasing, good communication wins business.
For homeowners and potential clients, if you've put off a project, now is the time to plan. Whether you're considering a kitchen refresh, bathroom update, energy-efficient upgrades, or preparing to list, pipeline activity is rising. Start early. Get your plans, budget, and trusted pros in motion. Be strategic about improvements. Focus on value-add upgrades, resale-ready features, or areas where you'll personally live comfortably for years if you plan to stay. The market is shifting, but being smart with your investments matters. Communicate and budget realistically. Lead times for quality trades are improving, but still constrained in hot metros. Set realistic expectations for pricing, timeline, and scope. Consider phased projects if necessary. Tap into local demand cycles. Markets in the South and Midwest appear more active lately. If you're in these regions or near growth zones, that's an opportunity window. If you're elsewhere, target niche value or legacy upgrades. Yeah, because the story this month isn't about charts. It's about momentum. And the momentum is finally pointing in the right direction.
All right, before we sign off, let's hit the big takeaways from everything we covered today. Not the numbers, but the meaning behind them. First big point: people are moving again. Not a stampede, but a steady thaw. Enough activity to remind everyone that the market is alive.
When people move, they remodel before the sale, after the sale, or instead of moving at all. It creates this cycle of fresh energy in the industry.
Second point: homeowners are re-engaging with their houses. A lot of folks pressed pause the last couple of years. Now they're circling back to projects they delayed: kitchen updates, bathroom overhauls, exterior improvements, all of it.
The third point is my favorite. This market is being shaped by lifestyle decisions, not just economics. That whole grandbaby effect, people moving closer to family, that tells you the motivations are emotional, relational, long-term. And when people move for love instead of leverage, they tend to invest in making a home their own.
Absolutely, and that dovetails into the next point. Remodeling is becoming the default path for a lot of households.
And while new home construction is cooling in spots, that actually strengthens remodeling. When fewer new homes are being built, existing homes become more valuable, and people put more into them.
Some can't find the right home. Some can't afford to trade up. Some don't want the hassle, so they choose to improve what they already have. Fifth point: contractors are reporting fuller calendars and stronger inquiries. Not a frenzy, but a steady lift, enough to suggest that 2026 could be a much busier year than the last couple.
And the last point: everyone, buyers, sellers, homeowners, remodelers, are looking for guidance. Real estate agents are still deeply relied upon, and the same is true for contractors. When people face uncertainty, they want pros they trust.
So the overall takeaway? We're entering a period where people are making decisions rooted in connection, comfort, and long-term stability. That's good for homeowners, and it's good for the remodeling industry.
And it's good for anyone listening to this show. Whether you're planning a project or planning your pipeline, the road ahead looks clearer than it has in a while.
That's our December wrap. Thanks for being here with us, and we'll see you next month on What's Up in Construction. As always, if you have a local market you want us to dig into, whether it's Georgia, the Southeast, or somewhere around the country, drop us a line. We'll tailor a future episode to unpack what's really happening on the ground.
What's Up in Construction is an AI-generated podcast produced by JOMA Talks in conjunction with JOMA Residential Remodelers, located in Athens, Georgia. It is produced by AI man T.O. Nee, executive producers Mac and Scott, under advisement from founder John Newland. JOMA Construction is an employee-owned and operated company. All opinions expressed are strictly from What's Up in Construction and do not reflect JOMA or any JOMA affiliates.